Hello, once again, welcome to our podcast. My name is Seewing Yee from the Yee Real Estate Network, and my special guest is Maureen McCann from Spartan Invest. Welcome, Maureen, once again. I always enjoy having some great presentations with you. Both of us has provided so much content for our respective real estate investors within our uh, respective network. So thank you for taking time out of your day to talk about some very, very important, timely topics around real estate. And our goal is to give out a lot of value for our investors, so they can be more educated and informed, so they have the confidence to make a decision moving forward with respect to taking action to achieve their real estate investment goals. So without further ado, let me share my screen and let's talk about this very, very critical topic. So the question is, we can talk about will there be a real estate crash, a correction, or a bubble? So let's go through some data, let's go through some trends, and hopefully this will help. All right, so just to take a step back, America is short more than 5 million homes, and builders can't make up the difference. And especially with a higher interest rate, I've been hearing many builders out there are pausing further constructions because they do not want to overbuild on the new homes and put it out in the market, and there's not enough demands, at least right now, on a short-term basis. So with that said, I mean, that'll exacerbate the lack of supply moving forward, especially with new builds. By the way, Maureen, you can chime in anytime if you have. I'm sure you will. So, all right, and then let's look at the current inventory level. As you can see from even from 2015 until now, if you can see the graphs, there has been decreasing supply of homes according to Alto's research. You saw the numbers, right? And this is just a very steep declining supply of homes available in the country, down to a point where in 2020 and 2021, we're seeing only less than 300,000 homes for sale throughout the country as recent as the early part of this year, 2022. I know there was some increasing inventory at this time, but we could talk about that in a little bit. So the question is, we look at the housing inventory. So we need approximately per year around 1.5 million 1.5 million homes to make it happen. So the question is, you look at the graph, are we going to able to reach 1.5 million home supply of homes? Well, according to this Zillow survey, not likely this year for sure, not likely next year or the year after. Maybe 5 or 6 years from now, we're going to achieve the balanced market. Balanced market means around 5 to 6 months of supply of homes should create a balanced market. Right now, depending on what market we're talking about, there are so many sub-markets in the US, but for my research, most markets in the country, they have about either 1.5 to 2 months supply of homes currently, which is still a very, very, very low supply. And demand, I know demand is not as great right now as there's early part of the year due to the rising interest rate. We'll talk about that also, but still very, very short. When there's a shortage of homes, think about it, Maureen. You and I have been in the real estate business for a long time. It's really economics 101 when the supply of homes are below the demand. When the demand exceeds supply, that means the housing prices will be higher. Now, I mean, the expectation are based on various resources. Experts are saying that we may not see double or triple digit appreciation like we have seen in the past 18 months, but we should expect to see single digit appreciation, whatever that means, 5% appreciation rate, at least for this year, maybe even next year. It all depends on the interest rate and what have you. So, and then some people, look, we've been talking to a lot of our investors in my database as for similar to you, Maureen. You have many investors in your database with Spartan investors as well. I'm sure people have a lot of fear and a lot of concerns, and then of course the news media paint this negative picture, negative headlines. Some say there may be a recession coming. There may be some say there will be a mild recession, and some people say maybe not so mild. It all depends. No one really knows for sure. But if you look at the past history, in the past 60 years of the U.S. economy, housing, according to Case-Shiller Index, housing stays strong throughout the recession. So, but listen, Maureen, I'm sure you agree. Even if there's a recession, whether mild or not, in the next year or two, people still need a place to live, right? There will still be a shortage of homes, right? There will still be a moderate demand of homes out there. So, so you have a quick comment on how the real estate will thrive and overcome any potential for recession times coming in?
This is a really great chart, and I would say that there's another good data source too, called Keeping Current Matters. And Dave Childers, he put a really nice graph up. 4 out of the last 6 recessions, housing increased in value. So, there are sensationalized headlines to attract eyeballs, because that is how those networks get paid. So the more sensationalized, the more negative, because we tend to go to the negative versus the positive. You have to just tune out that noise and just look at the data. And the data supports buying real estate is not necessarily recession proof, bulletproof, but it is definitely recession resistant. And that's something to keep in mind.
Yeah, I would agree.
If you're sitting on the sidelines being fearful because you don't want to buy, what does Warren Buffett say? I think
be fearful when people are greedy, be greedy when people are fearful.
Yes, that's what I was trying to get out. Thank you, Seewing.
You say it.
So this is a time when other people are sitting on the sideline. This is where when people sit on the sideline, they're not going to capitalize on the growth. And if you are an investor focused on growth and accelerating your growth, sitting on the sideline with your capital is not going to get you there.
Right. There's another philosophy I have: be a contrarian thinker, be a contrarian investor. Whatever the mass people go think one way, or the mass media, the mass population go one direction, the smart ones go to the other direction. That's the definition of contrarian thinker, contrarian real estate investor, right? So
right.
Yeah. One quick final thing on this slideshow: the only downturn during any kind of recession was obviously during the 2008 housing crash. Again, the 2008 housing crash was the only time over the past century where real estate has decreased in value. Isn't that amazing? And now,
I guess.
Yep. And people being so emotional about it, they think, real estate asset is a hard asset. It's not like stocks where you can go down zero value. It does not work like that. People need to, just get away from the emotions. I know emotions run people's lives, but you got to be smarter than that.
Data does not lie.
That's right.
Data does not lie.
We shown data, and here it is. Just pay attention, everyone. So again, the key demographics, baby boomers and millennials. There are 78 million millennials. Either they buying right now, some of them, many then there are many are still waiting on the sideline, hopefully until the interest rate decreases. And once that happens, who knows, we may have another semi real estate boom maybe next year. But baby boomers, myself included, we are buying, vacation homes, second homes. We're buying rental properties. So and we're doing 1031 tax-free exchanges. And Maureen, you and I, on a consistent basis, have been helping our investors to do 1031 exchanges. Typically, our investors sell one high appreciation property in California with low cash flow to exchange into 5 or 10 out-of-state properties with higher cash flow, and so forth and so on, using 1031. So again, baby boomers for our part are helping with the real estate market, and of course, the millennials are still waiting to pull the trigger more and more so. So anyway, so another reason why, Maureen, that we do not believe there's a crash, there will be a crash or a correction or a bubble, however you want to call it, which is different right now. Of all the homeowners in the US, 40% of the homeowners have substantial equity in their homes, due to not only due to the last 2 years of amazing real estate boom during the pandemic, but even prior to that. So for homeowners out there and for real estate investors out there, the mortgages you have, the equity, you have appreciation you have gained over the past few years, I congratulate you. So as a result, when people have so much equity, there's no way they can walk away from their homes, right? And furthermore, real estate investors and primary home buyers that's been buying these homes to live or as an investment property, we all have great credit. I mean, most of us have like 760 FICO scores, right? It's very, very hard to get mortgages these days. You gotta have a very good credit, very good financial profile to do that. So that's another reason why we're not going to see any kind of real estate crash moving forward, because of the tremendous.
Yeah, and see, when you think about this, if somebody gets into financial trouble and they have to sell their home, they've got equity in it. They want to sell it so they can take the equity out and go either rent or buy something that's left that's more affordable. So it gives them options. If you have no equity and we were in that same situation as we were in 08, you just walk away from the deal. People are not going to walk away.
Oh, absolutely not. Maureen, I don't know about you. You are a bit younger than I. Don't give away your age, but I'm not going to give away my age either. But I do remember the 2008 crisis. I've been through several real estate up and down cycles, and I've been in business for almost 20 years in real estate investment business. And I know firsthand what happened. The 2008 real estate crash is totally different than what's going on right now. What's going on right now? Back in 2008, there's a much more supply than available homes, and people are taking fog and mirror and they can qualify for a mortgage, right? I mean, people with no credit, low credit, they do these ninja loans, subprime mortgages. That's what triggered the 2008 real estate crash, because of unqualified people getting mortgages, buying homes, oversupply of homes. People are underwater. People does not have equity because of 0% down payment, and so forth and so on. And that's the major reason why it crashed back in 2008. But now it's completely different. People have great credit. People have substantial equity. People have good jobs and good income, and so forth and so on. So what are your thoughts about the why 2008 real estate crash is very, very different than today's real estate market condition? What are your thoughts?
Very easy to go to data. There was over 9 million foreclosures in 2008. We're at 1.3 or 1.2 is where we are right now. There's no housing crash coming, in my opinion.
Absolutely. Yep. People out there, you need to stop being brainwashed and paralyzed by all the negative headlines, the YouTube videos, getting clickbait out there, to talk about crash, they give you the 80%, crash or whatever. Just avoid those clickbait real estate videos out there. It's just very, very unhealthy to to buy into this.
It paralyzes people, Seewing. It paralyzes investors and then primary homeowners. It just paralyzes them from taking action. And if you're going to wait, you're going to miss out on the capital appreciation home equity that would contribute on your balance sheet as an appreciating asset, right? I mean, if you've got, let's say you have a home that you live in right now, worth $500,000. So your balance sheet is your assets, liabilities, and your equity. Now, if you were an investor and you invested, let's call it 5 $200,000 homes, that's $1 million worth of assets on your balance sheet. And let's just say that total portfolio increases in value just at 4%. That's $40,000 that showed up overnight, or I should say in that year. That's $40,000 that you made while sleeping by just holding on to the assets. So your growth is growing while you're sleeping. But if you don't have your money in the market or a hard asset that appreciates, then you're missing out on all of that. And if you're going to believe the headlines and be sidelined, this is what you're losing.
Absolutely. Buy real estate and wait instead of wait to buy real estate. Very well said. Make money while we're sleeping. Wow, what a amazing life. Yep. So look at the real estate assets that people own. The investors that own rental properties and primary owner-occupied buyers that that stick it out with their homes. Their value of their homes increased by 31% in a mere couple of years. Look at the total number of equity that are owned by people that have houses, $3.2 trillion. Wow. Well, this number does not lie. So it pays to be a homeowner. It pays to be a real estate investor to buy a portfolio of homes for long-term buy and hold. All right. And then again, let's reiterate, are we heading toward a real estate crash? Now, no one have a crystal ball. No one can predict the future, but you and I, Maureen, can only go with the data and the trends that are available to us. And again, let's recap. Right now, there's still a lack of supply, even though recently, due to higher interest rate, there are more homes coming to the market. And then again, those YouTube videos out there, they were claiming that is no longer a seller's market, it's a buyer's market. I don't believe that. Yes, there are more homes coming to the market, at least temporarily, as a result of the higher interest rate and just create a lot of panic, a lot of confusion in a market. But still, as I stated earlier, there's a tremendous lack of supply, and the demand is still pretty strong under the circumstances. Another reason, so strong demand, lack of supply, and another thing that we have is a strong job market. And the wages are growing. There's a lot of jobs out there still, and so this is a good sign. And people during the pandemic, a lot of people have received stimulus money from the government. And then people in the past 2 years until now, because of the stay-at-home order, a lot of people in the country in the past 2 years during the COVID have a lot of savings. So strong income and remote work, all those reasons tell you that a crash is not likely unless unless we have a 15% unemployment, or unless the interest rate goes to 10% or higher, then we may have a correction or a crash. But absent this doom and gloom scenario, I do not see a crash, a correction, or even a bubble. I mean, we're gonna have a stabilization this year, and hopefully the interest rate will decrease to hopefully 5% or slightly lower than 5%, then it would be fine. And then we look at the, as we're almost concluding this presentation, according to this research methodology, let me see who did this research here. This is a Fortune magazine dated April 2022 this year. It just mentioned which market in the country have a high level of home prices dropping and versus low level. As you can see, the blue area, is it blue? Blue and light blue, I think, is a very low to low chance of housing decreasing. So, as you can see, elevated the small portion of the U.S. where homes have a higher risk of dropping, or very, very small pockets, like somewhere in the Northeast, Connecticut, Vermont, I don't know. And also, I don't know where this is, maybe Arizona or New Mexico, and Pacific Northwest in Oregon and suburbs of Washington State, Seattle. But as you can see, most areas of the country still have a very, very low risk of home decreasing. And the areas that Maureen, the investment properties, the turnkey investment properties that I'm promoting are in the South and Southeast. It's doing fine. It's a very, very stable market. And the market that your company promotes are in the Alabama, Tennessee, and northern Georgia area, which is also show a very low risk of home prices are dropping. So Maureen and you and I, obviously, we do what we do, and we promote investment homes in a very stable, very high growth markets in the country. So, and finally, and here it is finally, moving forward, again, this is our strong opinion, Maureen, and as you can see right now, there are 82 million millennials, right? I mean, they are on the verge of pulling the trigger once they feel more confidence, once the interest rate drops, and once the inflation rates are being stabilized. But still a lot of millennials are still wonder, there's a peak buying home years, and a lot of people have not talked about the Gen Z. The Gen Z people, give it like toward the end of this decade, right? Right now it's 2022, like 2030. The Gen Z population, which is another 86 million coming on board, they could be reaching the age of 30 years old, okay, the Gen Z, and they may be in the market for buying homes. So when you look at this, the future of real estate, I can't see how homes, a supply of homes, and the builders can build enough homes to accommodate the current millennials and the upcoming Gen Z population. So therefore, in my opinion, the supply of homes will continue to be lagging behind demand. So, I feel good about it. So Maureen, can you recap this before we conclude this presentation? What are your thoughts in terms of the big picture?
Yes, Seewing, excellent slides. Data never lies. People need housing. This is just a basic need that we all have. And I think when you were talking earlier, it was, there are people that are just afraid to take action because they're believing the sensationalized headlines. You have to turn off that noise and really pay attention to what your goals are as an investor and your age, right? I mean, if you're an older investor, you need more cash flow now. If you're a younger investor, you have more time to use leverage to accumulate and grow your wealth. And your wealth is the fastest way that I know, Seewing, I don't know about you, but the fastest way that I've seen generational wealth, family wealth, your own personal wealth grow exponentially is when you are investing your capital in appreciating assets.
Well, I agree. I mean, totally agree. So at the end of the day, investors out there, take action and invest for the long term, and you'll be fine. Just stay the course, show discipline, don't panic, commit to your goals, and then you can be happy on the other side. Thank you so much, Maureen McCann from Spartan Invest, for sharing this great presentation, very timely. And thank you so much. Have a nice day, everyone.
See you on the other side.
Yep, see you on the other side.